Gold explorers are back in the spotlight as the price of gold is holding above its record high from back in 2011. We are talking to David Russell today, CEO of a very interesting and already advanced stage gold exploration company called Galleon Gold, trading on the TSXV Venture with the symbol GGO. Welcome, David.
Well, thank you very much, Warren. I'm glad to be with you here today on your show.
David, before we take a closer look at Galleon, please give us a bit of background about yourself. Tell us about yourself and your team, please.
Thank you for the question. I'm a degreed mining engineer with about 40 years of experience. I worked with a lot of different large companies like Asarco, Meridian Gold, and Barrick Black Minerals during the mergers. With Placer Dome, this would be the Getchell mine. And then we built the Apollo Gold, where we had the Black Fox mine in Timmins, Ontario, about 70 miles to the east, which is still in production today. But we do have a very good board of directors in the audit, finance, legal, banking, exploration, and operations sector. But the main key goes to your main staff, which is Lisa Buchan, the business development vice president, Agostino, the chief financial officer, and then Nate Tewald, he heads up the exploration with 3 other geologists that are working on the West Cache-Projekt. And we've got the dream team. We've got a great development and exploration team to take this company forward.
Okay, so let's talk about the West Cache-Projekt then. Please tell us what Galleon already has there.
West Cache is located approximately 13 kilometers west of Timmins. It's right along Highway 101, so the infrastructure is very good. Highway 101, for everybody, is along the Abitibi Greenstone Belt. It's called the Golden Highway. It runs right along through the mining camps, and it was built to develop the mining camps. What you have there is all the infrastructures, the airport, the schools, the hospitals, and you've also got other companies. Newmont recently bought Gold Corp out. They're in town, both open pit and underground. Pan American Silver is right next to us at the Lakeshore mine, and then there's Glencore at Kidd Creek. So you got all your major mines within this mining district. Now, the exploration itself covers some 3,550 hectares of land. We're well positioned along the Destor-Porcupine Fault. We have the both north and the south limb, which is pretty rare, on the same property, but we're located very close to the Hollinger and McIntyre mines that produce themselves over 30 million ounces of gold. Within the camp, there's been over 130 million ounces of gold mined. And being right next to Lakeshore, they have very similar structures within a quartz porphyry type of system. And we're having great success there. We started the program last April to May. We started with roughly about 2,000 meters of strike that had been drilled from geophysics in the early days, of being about 10, 20 years ago. And there's about 1,079,000 ounces in a portfolio. Our goal here is to add multiples of that, 2 million, 3 million ounces, but it's going to take some work. It's going to take a series of programs of drilling on strike and down dip to flush out this true exploration project.
That sounds very interesting. And as far as I understand it, during the course of those the first drilling, I think it started in June. You had a nice surprise during what was supposed to be infill drilling, if I understand that correctly.
Definitely, Bjorn. It was a very, very pleasant surprise. We were roughly about 9,000 meters into the program of infill drilling, what was called the East Pit, the West Pit, and then some down dip for the underground end of it. And a geologist had projected a hole that was drilled some 10 years ago up toward the surface, roughly about 160 meters below it, and said, gee, can I drill this hole deeper? I think there's another rock unit that we have not looked at. And we drilled it deeper, and sure enough, we hit what's called a sediment-hosted system. And it was roughly about 9.7 meters in width, about 7.16 grams. And then there was a higher zone of 3 meters of about 15 grams. And we looked at it and went, wow, this is totally different than what we set out to do. And now alone with that, what does that tell us? It tells us we have the earmarks of a new system that could also host another 1 million or so ounces of gold. So we need to take that one forward.
Okay, yeah, that's really a really pleasant surprise. But that also means that you will have to do additional work on this area of West Cache.
Yes, the additional work will almost double the project from 15,000 meters of drilling, most likely to 30,000 meters of drilling. And with that, obviously, we've got to raise a bit more money and come up with the capital to do that. And right now, there's tremendous interest in the project, and especially in the new find that we have. So we plan on taking that forward.
Okay. So overall, what are your plans for West Cache for the remainder of this and the next 2 years, let's say? Where do you want to be in, say, 24 months?
Oh, that's a great question. West Cache being a very, very large exploration project, it will take at least 5 different steps that I see to get to what I call a production phase. Development and production will occur after the bankable feasibility, but the first phase is to finish this infill drilling both on the east and the west pit areas. The second phase will be drilling off this new discovery. Both in itself can be each million-ounce ore deposits. We've got to complete in the third step a PEA study. That'll define what the open pits will be, what the underground will be, what the resource base, what the cost structure would be. And then it'll also advise on test mining from the open pit and underground. And that once you go into the test mining phase in year 2, that will actually define what the bankable feasibility study looks like, what it will cost to build our own processing facility, what it will cost to build the underground mines, what it will cost to build the open pits. It'll define all the parameters and economics on the project. Now, to get to that step, when we do the test mining, we're looking at the Bell Creek mill, that's Lakeshore, the Kidd Creek mine, the Redstone mill. There's a lot of different mills for custom ores. We'll be looking at that to get through the bankable feasibility study. So within 2 to 3 years, look for a new development project that's putting a mine into production if we're successful.
Okay. Certainly very big plans. Let's see how it all goes. Being in mining, you never know if there's not going to be some delays, but we'll see. It certainly sounds interesting. This is not the only project you have in the company, though. But let's talk about your Neil project in Idaho, I think. Please tell us about that and what your plans are in this regard.
Well, the Neil project is where we first started with Galleon Gold. And we took on a project as an 80-20 joint venture with we'll call him the gold guru in Toronto called Eric Sprott. So he's our partner on there. He's also a 23% shareholder with us. We started with this project. We've done a little bit of reverse circ drilling, identified gold structures, and more so we identified we need to put some core holes underneath the 125 to 150 meter level. That's where the old mining was taken to in past history. Once we get that completed, then we can actually slot the project into pre-feasibility study. But that will take about a year to get that completed. And the reason being is that it's number 2 on our list now. West Cache has gone right up to the top to number 1 position. So we are focused on it, but not as much as we are West Cache right now.
Okay. Well, West Cache, I think you have your work cut out there for the next couple of years anyways. And it will cost money, all the activities you outlined. And I guess that's why you just announced a placement of up to $8 million, I think. Who's going to participate? Will management up its stake?
Yes, all of the above. We did announce the $8 million offering. That's the capital cost that we believe it will cost to take the second part of our project through the PEA process and incorporate the new discovery that we have. Now, we've had just extreme interest from investors all around the world in this project. Eric Sprott's the first one that came forward, CCM Capital out of Germany. The whole groups have said, look, Dave, we'll back you on this. Will management participate? Yes, they will. They'll take a stake in it also. So the answer is to raise this. We're well on our way, and we see tremendous interest from the outside market, internally within the company, as well as our management team.
Okay, very good to hear. And it's a very big position for Mr. Sprott to have in a company. So he must think there's big potential there. One of the reasons investors should perhaps consider taking a position in Galleon Gold. In your personal opinion, what are the other reasons? Why should investors do that?
First of all, you take a look at a company, is the leadership and the management team, have they done it before? And the answer is yes. We've built many mines before. We've got the dream team that's done these up in the Timmins camp, as well as other areas of Canada and the U.S. developing mines. The other thing you should look at is the location. Being Timmins, Ontario, on the District Porcupine Fault system, 120 or 30 million ounces of gold produced in past history. We're in elephant country. We're on the right structure. We have the right address to actually put an open pit and underground mine into production. The other thing you should look at is that you have 1 million ounces now that look to be economic generally. Once we get through the studies, take a look at it. Do you have 1 million ounces? Do you have 2 million ounces? Do you have 3 million ounces? Are you growing? The other thing we will look at as the PEA comes out is, well, how large will the mine be? What we're looking at is a mine that will probably start at 60 to 80,000 ounces in the first year or two of production, then move to the 100,000 ounce production, then up hopefully to the 140, 150,000 ounce production per year. So once you get to that point, you become one of the upper level juniors to mid-tier companies. So we have the right assets, the right gold projects to take a company forward to be a mid-tier company.
Okay. Well, ambitious plans. We'll certainly check in later at a later point to see how it's all been going. And then we'll talk again. Thank you very much for taking the time today.
Okay. Thank you, Warren. I appreciate it.